It is March 12th, 2026. Let's start with the S&P, which was lower for the fifth day of 6, the third consecutive day lower. Not pretty, right? I would note that these candles are all kind of spiky from the 10 MA, which is typically first resistance. Look at this. Look at this. We roll. We're just breaking lower. I mean, this is actually today the lowest close since just before, I guess, what was that? Christmas? Not Christmas Eve. That would be the 24th, so it'd be probably the weekend. It's the 21st here. The lowest close since December the 21st. This isn't great. It's also a lousy close. I mean, it's just ended right near the low. So look, the ultimate issue is, do we take out the 200 day, which is 6,600? It's going to be probably 6,001 tomorrow. And of course, look at this. Actually, it could be even tagging purple gap 6,002, maybe tomorrow. Hard to tell, but close. If we break under 6,000, there's nothing but empty air. I guess you could argue, okay, we have a price threshold here around 65.50-ish, but really, if the 200 day goes, bad things happen, right? You could break down 100, 150, 200 points and then rebound, and then you could back test for 200 day, you could back test purple gap, this threshold here. But yeah, 200 day. So all of this is, as I've been saying for a few days now, all of this is chop. It's a war zone. Bearish under the 6,600, bullish above 6,900. Note the 50 day is now already down to 68.89. Look at it, it's coming on down. That's going to be around, yeah, by the end of the month, the 50 day is going to be around 68.50-ish. Yeah. So yeah, bad day. Officially, S&P was down 153 points, 1.5%. Momentum ticked down. There is zero sign of return. I will say cyclically, we are on the very low side. This indicator is minus 40. It's low. There's no question about that, but there's no sign of a floor here. We could easily tick down Friday, Monday. Bulls need to show up. A quick look at the VIX. I mean, look, we closed up 12.5% to 27.29. You look at last Friday's candle, very powerful, which played out with a jump on Monday, pre-market 35s. I think the cash market opened in the 31s. So I mean, look, that's last Thursday's candle. Today's candle, actually, arguably somewhat more bullish, not quite as spiky on the upper side. So yeah, that kind of suggests that Friday's got to open red. So if Friday opens red, the bulls need to show up and see an upside reversal. Otherwise, you got to think either we'll take out the 200 day tomorrow or we'll do it on Monday. Unless the bulls show up. My guess is that they will. I'll quickly show the 60-minute chart. We are cyclically low. I would note the lower high of 68.45. So now it's like, does this low hold? If we take it out, then we're going to take out the 200 day probably. But again, this is really borderline. Again, note the fact that we have a Fed next Wednesday. If we do bounce tomorrow, basic target, of course, is teal gap. That looks feasible. Again, things turn more bullish above 6,800 and then 68.45. The cautious, myself included, the cautious should be trading light until we break above that high. If we break above that high, 68.45 with some power, then okay, bulls might have something into the end of the month, perhaps. But otherwise, lower highs, lower lows. And that ain't bullish, is it? And even if you do cliff 68.45, you got this big resistance zone where the market likes to roll over. Anyway, I'll cover oil, gold, and silver at the end, and we'll just go through some individual stocks. Apple down 1.9%. Again, keep in mind for 200-day in all of these charts. So again, if Apple loses 244, you know, the fact, I mean, yeah, if it loses 244, that's easy. That target at 230. You have a gap there. And you got to ask yourself a question, 195? Anyway, so moving on. I'm going to fly through some of these because, well, most of you have attention spans that are very, very short. American Eagles testing the 200-day. First Majestic down 4% because of gold, silver were down. AMD down 3.5%. Again, note the 200-day at 190. If AMD goes below 190, 150 is easy. And you got to think more broadly, 120-ish. American Express, down 1.3%. I will say it's one of the few stocks that does suggest we might go up, but again, it's one stock out of many. I mean, that's a reversal candle and it leans bullish. And we've got the obvious target here would be green gap with the 200-day and the 50-day that's got to intersect it by the end of next week around 334-ish. That's 10% up. If Tom Lee is right about a big push higher, this stock is going to get to at least 334. Maybe not the end of next week, maybe the following week, but that's 10% up. And that is a reversal candle. It's subtle, but it's there. Moving on. Barrick Mining low with the sector. Boeing down 4.5%, approaching red gap. Bank of America down almost 3%. BlackRock, new cycle low down 3%. Blackstone down 4.8%, new cycle low. This is horrible. Look at that candle. There's nothing there's nothing good there. That's horrible. Caterpillar down 1%, but that is a reversal candle from the 50-day. Leans short-term bullish. Kamiko, it was fractionally down, but that's a spiky candle. Kind of leans net bullish. Carnival down almost 8%. That is the lowest close since June. Not great. Cleveland Cliffs, new cycle low. Coinbase down 2.7%. I will accept structure is a bull flag around the 50-day. Decker's down 2%. Disney down 1.5%. Gotta scan through these fast. Home Depot down 2.7%. That's not pretty. Intel down almost 5.5%. JP Morgan, new cycle low down 1.6%. What's today's candle? A reversal? 280, 289. Yes, it was. We have a reversal candle in JP Morgan. It's very subtle. It's by 6 cents. 6 cents above the low, above the opening level, hence a reversal. Again, the more bullish scenario would be to come back up to the 200-day, which is 298. That's $17 up. So this one does lean bullish along with American Express. KKR, not bullish, down 3.7%, new cycle low, new multi-year low. Horrible. 28 RSI is oversold, but it's been oversold since early February. Momentum has, well, it's fractionally positive. Volume today was up quite a bit, 13 million. Morgan. I will type in Blue Owl Capital because that's one of the private equity companies that's in trouble. Down 4.5%. Nothing good there, right? 861. Oh, look at it. Look at this. It's been basically cut in half since December. Not surprising. Micron down 3%, but a lot of chop mostly. Netflix down 0.6, holding up relatively relative to the main market. That's a pretty good day. Nike down 2.8%. I covered that in my after hours subscriber post. 51's next support. NVDA down 1.5% in line with the Nasdaq. Again, note the 200-day 177. If it does, but when eventually it does take it out, basic target is 150. Ondas up 5%. War is good for business. Occidental up 5%. Higher oil is good for business. Pan American Silver down 1.25%. Not a reversal candle, but it's holding up better than this sector. Palantir up 1%. I mean, you could argue structures bull flag. PayPal down 2.7. Red cap flat, black candle, bearish. Rocket Lab down 5%. SMR down 5%, terrible. Target down 2.5%. Tesla 3.1%. Yesterday's candle was pretty spiky on the upper side, which was leaning a little bit weak. We now settled on the 200-day, which is 393. Again, if we do settle under it tomorrow, then it's just got to unravel, right? But it's marginal. I mean, it's borderline, I should say. Take two, don't care right now. Oh yeah, of course. United Airlines getting hit because of higher oil. United down 4.5% to 86.53. I mean, it's holding the Monday low, but still, it is the lowest close since 1st of August. Actually, I should go back to that one. Uranium Energy, that's a hollow red reversal candle, bullish for Friday. United Health down 2.8, not great, but really it's mostly just a broad chop fest. UPS down 2.9%, downward a sector, higher oil isn't going to help. Exxon up 1.3. Yesterday's bullish engulfing candle played out. You could argue that there might be a head and shoulders setting up here. I mean, it's a bit of a weird one, but if this one gets stuck around 155, and we actually look, we did print 155 at the open, so you could draw a head and shoulders on there. If you did, you'd have a neckline around 147. Take off $12 off 147 would give you 135. Yeah, target would be 135 if it was a head and shoulders. Something to keep in mind. All right, let's jump to oil, and we'll end with gold and silver. Commodity oil. Look at that. $9.14, 10.5%, closing at $96.39. Wow. So 1 day left of the week. The current candle is black. We're currently at $5.49, 6%. A quick look at the monthly candle. I mean, look, that's you can argue certainly we have a spike, but that's a pretty damn bullish candle, right? I mean, I could see $150, $200 oil. Uh, that's not this month, but maybe April or May. Look at that blue bar. If that's gonna be up there in April, I gotta expect higher oil. Again, not immediately, but you know, looking at oil on a 60-minute via USO, you could argue we have a slight divergence here, but you know, we're on the high end. It's not. I mean, in terms of going long, you wanted to go long. That's where you went long. There, right on that spike, right? 94, and now we maxed out around there, which would be around 118. Literally there. If you follow the cycle, right, you buy on that low, you sell there. I mean, maybe you don't buy until that candle, or sell until maybe that candle, but you got to get a large chunk of this, and now we're on the high end. This is not a place where you go long, because the potential threat is that we roll over again and go down into the Fed, maybe. Anyway, moving on. Let's go with jump to start with GLD. Yeah, I mean, not a great day for gold. They tried to rally in the morning. Um, so gold was down $94, 2%. Didn't end well. Again, that's because the main market pulled them back. Structure remains a gigantic bullish pennant. Still valid. Let's jump to silver. Silver is officially down $1.43, 1.8%. You could argue structure is above uh trend. You could argue we're setting up some kind of baby bull flag, maybe. I mean, I still think this green gap will be prone to being tagged. Let's go to the 60-minute. Cyclically, we're on a low side since yesterday. Very, very stable, unusually stable. Uh, in theory, we go up into next week. We did actually tag this green gap at the open and then cooled back across the day. I went long. I went long on that little spike there. So I'm basically, I'm about 0.5% down on my entry. A little bit of a closer look on the 15-minute. Yeah, I went long about there. Could have sold here, but I was looking for somewhere here to sell, and we only got to there and we leaned back. So that was. But my position size is small, so I'm not going to worry about it. I am thinking actually, if we go down a little bit more on early Friday, I could add a little bit if I wanted to. I'm trying to keep my position sizing very small. But yeah, on a 15-minute cycle, we're very muted, basically flatlining in terms of momentum, just kind of like here and here. This is a buying area. This is why I bought this morning, right? I mean, look, this is what this morning, right? I was talking in my space this morning. I'm like, I can't buy here, right? So I waited for the cycle to come down, and I saw this around 11. I'm like, okay, I can buy now. And then we rallied, but cyclically we were just kind of cooled back a little bit. Setup does lean bullish. I'm gonna hope I will have a vain hope tomorrow. We just gap up into this somewhere above 78. That would be 2%. I need a 2% gain to get up to here. I need 3% to get to here. So I would, if somehow silver opens up 2.5 to 3%, I will be a seller here. A lot of resistance around here. Look at that. Look at this. Look at that spike. Look at actually, yeah, that was this morning's. This morning's opening candle was black from just below threshold. So I would be open to buying if somehow we open tomorrow, maybe around 76, maybe. So yeah, if we open down, I'll consider buying or adding a little bit. If we open up, I'll be a seller. Okay, what chart should we end with? I don't know. Maybe the weekly chart actually. Why not? I mean, look, we are lower for the 5th week of 6. Not bullish, huh? You can see the sellers again. Look at the spike. Sellers into strength. So my issue is if we go below 6,600, which would be the 200-day, then there's nothing until the 38% fib 6174, which is the old high from last year, or around that area. So yeah, it's going to be important for the market to rally tomorrow. Some degree of bounce. If we settle the week under 6,600, and that's it, it's over. We go down to 6,100s. Whether that's next week or late March or early April, it doesn't matter. But yeah, if we break under 6,600, bearish. If we break above 6,900, then somehow maybe old Tom Lee's target is valid. But I would certainly say if we go under 6,600, Tom Lee's crazy target has to get dropped. So we'll have to see. My guess is that we actually go up for a little bit. That's based on American Express, JP Morgan. Silver's on the low side. Equities are on the low side. So there's a chance. There is a chance that we have some kind of jump into the weekend. But if like last night, right? Yesterday was pretty subdued. There was no downside power, but we did see the downside power today because of the two tankers that were on fire. So who knows what will happen tonight? I have no idea. Nobody knows, right? That's the problem. That is the problem with being long anything right now. The vulnerability is you wake up in the morning, the market's down 1.5%, 2% just to start with. But yeah, this market is weak. It's leaning weak, and I actually will end with the daily chart that I started with. Again, yeah, can't overemphasize this. For 200 day, if that goes, then down we go to the 6100s. And yeah, we should leave it there. Good night and have a good Friday the 13th. Should be fun.